Hi traders, welcome to Profiling to Profit. Hope you guys had a great week last week in the markets. We're going to take a look at those real quick, look at some of the events that happened, and of course look into next week and see if there's areas of interest for us to get involved in the market. Today is Saturday, May 7th, 2016. Let's get started. Let's talk about news first of all. Last week we had the employment situation here in the United States, which is known as non-farm payrolls. And they came out weak on Friday. Everybody was expecting a strong payroll number, and of course it came out weak. So what did that do to the market? Well, the market didn't like it, and it responded by selling off fairly early in the session, and of course recovering later in that afternoon. We'll go through that here in a minute, but what's on tap for next week? Let's take a look. We got a couple things. Well, next week is which starts on the 9th. May 9th is the week of speakers. The Fed heads are out speaking the tour, and you can see there's a plethora of them. We have Charles Evans on Monday, Neil Kashkari, and then of course a load of other speakers later in the week. And on top of that, we just have regular news. So be sure to keep an eye on your news, of course, and the times. It's more important for traders that are around the world. Know the times. Let's take another look at another calendar and something of interest that will make, if you're a euro trader or dollar trader, this could make a difference in your week. Of course, Great Britain, Bank of England is going to make a decision on interest rates next week as well. I believe that's on Wednesday. Nope, that's on Thursday, the 12th. So again, make sure your times are correct. You know when the times are happening. That way you can either hedge your current positions, or you can flatten before those news events. So, all right, let's take a look at the markets. Let's look back. Let's pull the indices up. Of course, we start with our favorite, which is the NASDAQ. Okay, NASDAQ last week had a very narrow range week. Okay, this is a very small, compared to the previous weeks, there's a lot of volatility up and down. Last week was very narrow. We sort of expected that because of the news on Friday. It's typically morning, early trade in the week is you get a little bit of movement, and as we get closer to the unemployment number, then it sort of starts to scale back and go sideways, which it did. Now on Friday, and just as a reminder, these are weekly profiles with 2-hour candles. So I'm going to roll this down to a 30-minute candle. I want to take a look what happened on Friday. As I mentioned, we had news out from the Feds, from the unemployment, and we did go ahead and drop. Okay, and then we opened up down way below the value area, and we chopped around a little bit, up and down, up and down, up and down, and then of course late into the day we rallied in the session, closed at the highs for the day. Pretty bullish move in there. However, I don't think this market is done to the downside yet. We got some areas we need to watch. First area we need to watch is this area from the 43.78 on up into that 44.02. This is going to be an area of resistance again. We got to watch that. The risk is up to the top side at 44.05 right here. And of course, if we go ahead and this gets rejected again, then we go down and we could take out these lows and go back to our target area that we discussed last week here. Okay, if we break above that, we have a great chance of going back into our resistance area, which, you know, we're gonna expand this area right here. We're gonna take this area and we're gonna expand it a little bit, or actually bring it down, should I say, and make it a little larger. This is a big area of volume right here, and we think that the price, if it gets above this resistance, can move back into that area there. If you go ahead and you have your risk up here and you get stopped out, then you probably know where this thing is going at that point in time. So some good areas here to take a look at and watch. Now if price does continue to be very bullish and moves, and the machines and everybody else move it back above this let's just say 44.90 area, then again all bets are off. We may swing back up and see new highs. However, still pretty weak right here. The safe bet and the path of least resistance is still to the downside until we start cutting through these areas. All right, let's take a look at the ES. ES is pretty much the same story as the NASDAQ right now. Again, pre-market, market sold off after the news, had a decent pop, and then of course rolled back up in the afternoon. and here we sit at the highs. Same story. We have a resistance area up here. This is sort of the line in the sand for the ES. There is a resistance up here, obviously, at the last week's value area high around 58. And if they get above 58, they will squeeze any weak shorts in here, and they'll roll it up into this next high. They'll go take it. They'll probably test this high up here at 2077. So you could say this first level right here is the first level of resistance, excuse me, is going to be right here at this 2059. Above that, then the target obviously are the magnets up here at the highs. If this gets rejected in here or pokes its head up and then comes back down into the value area again, it could roll back down. Our targets again that we were looking for is the 2025 and the 2019 from this previous week over here. Almost got it. Unfortunately, bulls came back in and said, hey, we want to move this market up, or somebody was taking a lot of profit in here. So those are nice areas for the ES. Let's go take a look at the Russell. All right, Russell, it's the interesting thing is that now we're sort of in lockstep with all the indices. So we're seeing the same thing along all indices, and we just need to find the areas. And in this area here, it's a big area, 1118 on up to 1123. That's a big area. Just watch the zone. Risk is right above this zone right here. If we get rejected, we roll down. We've taken out some of these areas here that we had marked, and also we have some gaps that got filled after the news event on Friday. Again, we don't ever recommend holding into news events unless you have a healthy profit, either hedge or flatten. But in this case, you did get the targets if you were short from the previous week's video. And then of course down here, if we do roll down and take those lows out, which is possibility of happening, then our target areas are going to be down around the 82 to 86 area. So good risk reward, zone up above, risk above it, and then of course the zone down in the 1082, 1086 area for a target. All right, one thing I want to take a look at now is, I'm going to keep that open, is I want to take a look at some of the other markets we've been watching, keeping an eye on. Let's start with gold. This is interesting because we have a cool area of something that could be happening here. We see this nice flag. Of course, the flag broke out as we discussed. Now it's starting to consolidate up here. Now, one thing gold does, if you've been around the markets long enough, like we have, one thing that gold has a tendency to do, it will break out of flags or patterns, or even out of profile patterns, and start to build value. Okay, and you see all the volume in here, a lot of volume in here. Tried to poke its head back into the flag. It did try to fill the gap, and it just missed by a few, looks like a couple dollars there, and then roll back out of the flag. It's just a nice balanced profile on a weekly basis. They tend to roll this back over and catch people short, so we got to watch for the squeeze in here. Now, of course, this is a bullish pattern still, and from all the talking heads on TV, everybody's starting to get long gold. So that's when you have to sort of watch out and say, if everybody's getting long gold, is that really the play? So again, as a profile trader, this will help us find the areas. Obviously, if they take out the 1306, this thing could end up, keep going up and up and up, and we're not looking at any targets to the upside at this point. But if this thing rolls back into this zone this time, the next target here is at 1270. That's going to be the magnet. They'll take that out, and then they'll start filling in down to this 1259 area. Okay, so you got to watch that. It's sort of a head fake, and they love to do that in the gold market, and they usually squeeze people hard, and that's why you get those big accelerated moves, because everybody's jumping out of their position. All the short-term pikers are jumping out of their position because they're stuck, and you got to watch for where people are stuck at, and the profile is really good at helping you identify those areas, and of course the targets to those areas. So again, if they roll this back down into this area again, most likely take this 1270 out to fill the gap first, and then just look at your high profile or your high volume nodes down here along with your low volume nodes, and those are great targets along those areas. If they tend to take and roll this thing all the way over, by the way, then this thing is going to probably end up down around, maybe even fill a gap down here around the 1163 area, but that remains to be seen. That's a long movement right there. So we'll just watch this one and we'll see what happens on it. All right, let's go take a look now. And as we speak of that, let's go show you an example of one that just did that. Okay, the euro loves to do that as well. The indices here, they don't tend to do that. If they fail, they fail pretty quickly. They don't tend to, you know, balance and then sell off to get people stuck. So here's what happened here in the euro. Euro goes up and has a similar pattern to gold, nice flag formation, and then breaks out. And looks like it's starting to balance, but then all of a sudden it goes ahead and cranks down into the flag again, or the original balance area of the triangle breakout. Okay, that's a pretty weak telling a pattern right there. And again, it's just like what we talked about. If it comes back in here and it stays in here, then there's a chance it's going to roll back down. Now we have gaps down here at 113.65 in the euro, which now is just on everybody's target. Okay, and then from there we obviously have the high profile node right here at or the high volume node, excuse me, at 113.30 on that deal. So risk is right above here. Risk is right above the breakout area at about 114. Targets are the 113.67 and of course the 113.35 area. If it continues to get weaker, and of course we, again guys, watch your news because we have Bank of England interest rate decision this next week. That will have an effect on this. So make sure your risk is defined. Make sure that you know the time frames on the news as well. All right, let's keep going here. Let's take a look at crude. There's not a lot of change in crude at this point in time, and excuse me, not a lot of changes in crude right now at this time. And what we're looking for in crude, and an area that I think is very interesting, is now we had an inside week. Okay, and I think if you remember correctly how we do the inside weeks, so let's take a look at this real quick for newbie traders here. The inside week is where we have price only trades inside the previous week's high and low. So last week we traded inside there. Why is that important? Because typically the following week we will see a probe to the upside. Okay, or downside. They will definitely test it. Now, will they continue? It just remains to be seen. So what we're possibly looking at, which is one of my favorite patterns, and again, patterns don't always work, but with the profile it is very telling and you can define your risk. We look for a poke up here, we call it a poke, and they put their head up there and they run some stops. Okay, because there's people short above here. When you think in the forms of a profile, think about also where people have their stops, because in today's environment of the markets, a lot of people, a lot of the machines are looking for those stops to get filled. So they could poke it up here and then bring it right back down into where? Well, they could bring it right back down into this range. Okay, and that would be very very bearish. Okay, then your risk, of course, would be defined. It would be above the most recent high, and then as long as it stays inside of this range, you have a great chance, a high probability chance of that to continue down and test the lower end of that range. So we're looking for a poke up there and then possibly a rollover. If it doesn't happen, that's fine. There's no trade. We understand that. But that's an area of interest to keep a watch on. Now, we don't know how far they'll poke it up, but we think that's an opportunity. Now, if they go up and they continue to build value up here, then obviously this thing has more upside to it. But right now, and we're looking for that scenario. Now, if they continue, if they continue to sell this thing off, then we'll definitely look for areas down here once they get down there and they approach that area to possibly define risk for more movement to the upside on that. Okay, we looked at the euro. Let's take a look at the bonds lastly here and the notes. Those are very interesting. There's some good areas that are setting up. All right, let's start with the notes first. We talked about a couple weeks ago how we thought going to balance after this double balance area here to the downside. And we said, we drew this box, and we said it's probably going to balance inside here, and sure enough it poked down below. And again, this is what we talked about just with oil, but just to the reverse. They poked it down below, they ran some stops, pulled it back up into the range, and of course they ran it up and then balanced here. The following week they had follow through, which is very good and very telling. Now we went up and almost tested those highs from 5 weeks ago. All right, now a quick pullback off that little move to the upside. We found the area here of 130.05 to 130.14. This is the zone that needs the hold. If they can hold this zone right here, there's a great chance they roll this thing back up and take those highs out of that 131.1 area. Now risk is below this area. If they start trading down around this area, probably need to get out, and because they're going to probably test this lower area. Bonds, real similar to the notes. Okay, they did this virtually the same thing. They poked their head down before there. They got people stuck short, you could call them the early shorts, if you will, and then they squeezed them real hard in here. And that's why you have these accelerated moves in here, because everybody was thinking the bonds were done. Bonds poked down. They came in here, consolidated right at the where. It's interesting how this always works in the profile. They usually go back to the place the magnets, we call them, which is either low volume nodes or high volume nodes, which this was. And once they said, hey, listen, we want to stay here, then they squeezed them. So everybody here above that 163 got hurt pretty bad when they took this thing off. So again, similar situation to the notes. Bonds went up, and tested actually double top there. Didn't quite take out that high from 3 weeks ago, but they tried. They pulled it back off here. We got to hold this high volume node right here, 63.29 to 64 and some change 13. Your risk is just below here. If they can keep it above here, they can roll this thing back up, take out these three highs. So we have 1, 2, 3, third time, fourth time they'll usually break that thing out, and of course go up and test the 167s up there. They chart trading below that. Obviously they may want to go down and test that lower area as well. And I forgot, gentlemen and ladies, we have one area. I want to go look at the corn. Corn, we talked about corn. We said, hey, this thing broke out, and corn did break out. If we look at it, let's pull this in a little tighter. Corn did break out, and it is pulling back to what we call the scene of the crime. This is a normal thing. If it doesn't always break out and just keep going in the futures and commodities markets. Typically they break it out, they bring it back. Now the key here is, will they roll it back in here and start trading, or will they move it back up, take out highs, most recent highs, and of course these highs back in looks like October of last year at $3.99. My guess is that they'll go test these $3.99, but we're just forming a little balance area here. We come back and test the breakout area. If the bulls are really serious about this, they'll take this off. Risk is obviously below this area, looking to take out new highs and continue further into the planting and growing season for corn and stuff. So I think that's it, guys. We got another good week coming up. Watch your news, of course. Make sure you define your risk. That's what it's all about. The profile is great at doing that, helping you find low risk areas where you can have high probabilities. Also, please go over and visit our website at Market Profile Trading Academy. We have all of our videos logged on there, and you can watch them for free right now. Also, if you have questions, you can contact us, or there's a lot of free resources on there. Otherwise, guys, have a great week, and we'll talk to you next time. Take care.